Hello everyone, and welcome back to Speculator Episode 5. Not sure what we're going to do in today's video. We're probably going to try to trim off our portfolio and do a bunch of strategies to try to help boost up our portfolio value. Quick notification, I'm planning on going on vacation tomorrow for a little bit, so I'll probably be back on Monday. So that's why I hope to make more videos. I'll probably be back on Tuesday, so that's what my plans are. Be back on Tuesday and basically do things. Start doing more speculator. I have some ideas, like I'm going to probably do a top 5 things to do before you're 20, and top 5 favorite finance creators, and maybe do some stock analysis like Texas and everything. So it's pretty nice. So today, we're just going to do a quick analysis. Currently, Florida Lights is doing really well. I think we did do a bit of a sellout like last episode. So we're hoping that goes up to like $50 or something before we do another trim. And we currently have quite a lot of cash to play with. So I'm going to go look for some what to do with the cash. So they're currently easing the interest rates. So I think it'll be a good time to like probably lock into some long bonds. So we currently have, oh, that's the short bond. I made a mistake of that last episode by buying the short bond, which is not a good option. If you buy a short bond, you get kind of messed around with. Can't find my calculator, so I guess I'm going to use my iPhone real quick. Oh, okay, so we're just going to buy 30 of these. I don't know why the ask was all messed up. So we bought a ton of government bonds, and we still have like $11,000 left, so I'll probably throw that into like some kind of dividend stock. But we're hoping that the interest rates go down. We're really bullish on bonds right now. So I might buy some corporates too. I might as well buy a corporate. So we're going to use the recall database. Oh, okay. I just select the criteria. So we want convertible bond at 0%. Just because I like it. We like it. You can pay less for a bond. So we're looking for a deep discount. I feel like this one might be the best. And we got some no more like super duper deep discounts, but they're in like the riskier areas. So we're gonna buy out this bond. We're gonna buy out maybe 11 of it. We'll keep some cash, a tiny bit in cash, but not a lot. So this is in 2028. So let's buy 11 of these bonds. Not take out any more not take out any margin. If I feel like it's necessary, I'll take out margin, but highly unlikely because I want to try to mainly just could have bought more because it's a deep discount, but it makes no sense. So that's like a good chance. Like what we saw right there, what I just ignored, is they're increasing the lending amounts. So that means that the interest rates are definitely going to go down because it means the banks are using more of their reserves. So that's good news. So if the stock we bought a convertible bond. So if the stocks do end up going up a ton, we can actually we can convert it. Like I think the game automatically converts everything into a certain period, so we can make profit off that too. So if the stock does rebound a shit ton, we do make money. So that's good news. So that's the advantages of a convertible bond. You get upside while having limited downside of a bond. So you get the best of both worlds, where you get a bond where you get stable income. So that's really just my strategy today, is basically what to do with the cash and trying to boost up the value of our account. So that way I can unlock options and try out different hedging strats and everything else. So, yeah, I had a bit of fun today. I went to a restaurant for once because of the whole COVID thing. I've been kind of avoiding restaurants like the plague. But yeah, I went over to Beer Town in Cambridge, and it was pretty fun. I had a few beers with my dad, and I had a great time. So, yeah, quite a bit of fun times with him. And so we plan on mainly just working with our... Okay, interest rates are at rock bottom levels. Enough rambling. So we are going to sell the government bonds and the short bonds, of course. And we're going to take home big profits. Hopefully on the short too. Hopefully not... Oh, a very small gain on the short. So if I would have bought more long bonds, that would have been nice. But whatever. So we're going to see what my bonds... We're currently up about $500, but it's not really reached its true value. I'm trying to wait until it hits 100 or 90s until I sell, because I feel like honestly they should be valued at 100, especially with them being investment grade. So that's pretty good. So we got all those bonds, so that's good news. especially the government ones, so that's good news. So we have a ton of cash to work with right now, which is good news. The only problem is we're not receiving interest off of the government debt at great levels, so we have to find some kind of investment that will be suitable for everything. So, like I said, I'll probably start diversifying a little bit more, so I'm thinking about maybe buying some insurance. There's no projections, I forgot about that. So summary, we're looking for a cheap insurance company. This one would be a good one. Occidental Life would be really good. Good on the PE, good on ROE. Oh, damn, that's a good dividend. Yeah, I would love that. I would love these two mainly, but I would like Occidental Life because they're cheap. The question is, how well are they doing when it comes to dividend-wise? So their dividends per share is 8 cents a share, and their earnings is 4 cents. Oof. So they might not be able to afford it, but over the long term, I'm hoping that they're able to grow their earnings. That way they can be able to afford it. So they have decent cash out position. So I think it might still be worth it buying it because it's at such a deep discount. So I'm probably going to take up a $10,000 stake in that company because I don't want to quote unquote bet the farm on this case. So if you bet the farm, you're betting like almost everything on it, and I don't think this stock is really worth betting the farm on because it's just I don't see that they can really afford their dividend, but they might be able to afford it in the future. We're about 816 shares. And I also want to diversify a little bit more too, so about a high yielder. So I feel like it's about time we get into maybe let's just try doing a little bit more growth too. I want to try to boost up our value of our portfolio over the long term. This one would be bad, but it's got a bad credit rating, so no thank you. Yeah, I think you are the winner so far. You got a great amount of ratios. You gave all the dividends. Yeah, I think you're the winner so far. So we're going to bet the farm on this sucker, and hopefully it goes up a ton in value. But if it doesn't, it's honestly not the end of the world. I'm going to bet 30,000 on it at 28.07. It's going to buy 1,068 shares. So we're hoping that this stock can go up to maybe $50 or something. So here's our stock positions. We have quite a lot, but we're hoping that this one goes up to maybe $50 or close to there. And we take home big bank, and then we use the big bank basically to reinvest into more of our dividend stocks. So we're taking out a growth position. So growth positions do take on more risk and also risk is dumb. Risk also comes from not knowing what I'm doing. So in this case, I don't know what I'm doing whenever it comes to growth stocks because I mainly buy value in dividend payers, so kind of sucks. But so we're making good money off this one so far. The Protein Labs, we made like 7K off of it, which is not bad. But I think it can honestly hit $50 or above. But it helps always to check on them and see how well they do. So dollar, almost 20 PE, 58 cents a share. So that's for the entire year, right? Okay, so they're actually going to do really well this year. So hopefully they become nice and cheap and everyone starts buying into the stock. I'm hoping it gets 50. That's probably near my exit. So I'm going to make good money off this stock. And then Water Lights, don't care too much about you at the moment. You're more of a passive hold for me. I'm mainly just keeping them for the dividends. So it's almost at its true value. This is when I look at the PE. The PE is one of the most important metrics. So it's the price of the company. So the current price you're paying is $42 a share. And the earnings is the E.P.S. So the E.P.S. and that's for the year. So if they keep doing really well in the earnings, this stock will explode in value because it'll make the PE much better. But it might be worth it to take your profit and run. To a certain extent, it might not be worth it though because it's still kind of cheap. I think at 50 PE it gets a bit ridiculous. So we're hoping that the stock value explodes over the long term. 15 cents, a little bit better than expected, I believe. So they did beat the consensus. They beat the estimate. So they could probably afford that dividend, so that's good news. So our annual cash flow, we're actually doing pretty well when it comes to everything. Yeah, so the reason why I sold out bonds is because it's at rock bottom interest rates, so that's very helpful. So we're mainly aiming for growth. They report their earnings, 53 cents. Better than projected earnings, so that's good news. Hopefully the stock doesn't fall. Let's go. Okay, this is when we research it, definitely. Because the company could be a little bit overvalued. $24. $2.32. 41 cents. Okay, it might be worth it to sell the sucker and take home a bunch of profit. So currently we made 30K profit. I'm going to exit out because it's a growth stock. So it doesn't make any sense to trim out of the sucker. It makes sense to get out because it's a little bit of an overvalued stock. So we took home big gains whenever it came to that stock. We're currently at 64K, which is good news. Checking the timer, about a minute left. So I have plans on maybe next episode utilizing more of this cash towards more dividends and more bonds and maybe trying to grow our value by a ton. And then basically using that cash towards growing our value and later on unlocking options and everything else. Today was a pretty boring episode. I didn't really talk about much important things. That's just mainly because I wanted to let you guys know that I'm going on vacation and everything, and just wanted to try to boost the value of our account this episode. So not much to learn about besides the whole fact that growth stocks are very volatile, and so it makes sense to get in and get out, especially if they don't pay much dividends. So that's really the only value they have is if someone's willing to pay more for it. So in my opinion, I'm not a big fan of growth, but growth does serve its purpose, in which we make good money really fast. And anyways, that's it for the video. I hope you guys take it easy, and I'll probably start uploading more on Tuesday. So everyone have a good weekend, and I'll talk to you guys later. Bye bye.